everyone. This is the pre-market report video for today, 8th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's have a look at what happened on Friday. Around 10:30 am, S&P Global released both service sector PMI and the composite PMI. Both comes as highest value in the last 3 months. Service PMI increased from 56 to 59, whereas the composite PMI increased from 57.4 to 58.5. Overall, both the data are very much positive, which in turn supported the market on the positive side. On the other hand, HDFC Bank released the Q3 updates, not the earnings, just the banking parameters like how much the deposit grown, loan grown, CASA ratio, etc. Again, we can't compare lot of parameters directly to last year since at that time the merger was not happened. Rather, we can compare some banking parameters sequentially. So then, as per that provisional bank quarterly update statement, wholesale deposit contracted 3.4% quarter-on-quarter basis, which in turn puts pressure on HDFC Bank throughout the day. So, IT and service sectors supported the market, whereas HDFC Bank dragged it down. And another sector that dragged down was Pharma. About that, we discussed on last Friday pre-market itself. ICRA rating released the report that Indian Pharma expect to grow around 9 to 11%, but the report also highlighted Indian Pharma facing tough pricing competition in US, hence the sector negativity. In between, during our market time, there was an escalation in the oil shipment in Middle East Sea, which in turn created some volatility. But despite all this, still Nifty closed positive for the second consecutive day. However, on week-on-week basis, it closed marginally down 0.09%. About institution, for the second day in a row, FII net bought substantially near 1,700 crore rupees, whereas DI net sold for massively 3,500 crore rupees. As a whole, last week, FII net bought for 3,300 crore rupees, whereas DI net sold for 7,300 crore rupees. So now, it's not the FII dragging the market down, rather it's DII. That's the quick summary of what happened in the Indian market on last Friday. Now coming to US, before their market opening on Friday, US Bureau of Labor Statistics released the non-farm payroll data. Here we know already on Thursday night, the private firm ADP already dented the sentiment by releasing the very good job addition number based on their payroll database. In line with that, on Friday, as per government data, the number of job addition on December month comes as about 2 lakhs, which was way above the expectation of just 1,70,000. And the unemployment rate also comes as 3.7%, better than expected. So both these good jobs number reduced the expectation of rate cut in upcoming March month, which in turn pushed the US future market down. However, ISM service PMI data showed there is a rapid degradation in service economy activity over 2% down. I mean, from 52.7 in November month, it dropped to just 50.6% in December month. Also, the same report showed that the service sector employment was just 43.3 in December, and it is the lowest level since July 2020, which again increased the rate cut outlook. I mean, earlier when the government jobs data released time, the chance of the rate cut in March month dropped to just 55%. But when the ISM service data released, the probability of rate cut again increased to 71%. Because of all these, US market closed marginally positive. So now simply if the US rate cut probability in March increased means then the global momentum is positive. If the probability decreased means then the global momentum is negative. That's how the whole world stock market is running. Anyway, at the end of the day, Dow Jones up marginally 0.07%, S&P 500 increased by 0.18% and Nasdaq too marginal positive 0.09%. Regarding VIX, surprisingly despite the volatility, it increased marginally from around 13 to 13.3. Just for info, though on Friday, US market closed marginally positive, but on the week-on-week basis, after 9 weeks of positive close, last week it closed negative. Moving on about oil, as I said earlier, there was an escalation in Middle East. As a result, oil increased around 2%. On Saturday morning, WTI crude closed near $74 per barrel and Brent crude closed near $79 per barrel. Coming to Indian ADR, Wipro and ICICI Bank slightly more positive compared to Indian market close. Whereas for Infosys in Indian market, it closed positive of over 1% due to the JP Morgan's unexpected IT sector upgrade. That positivity made the ADR to open over 1% positive, but at the end of the day, it haven't sustained and closed just flat to positive. Whereas about HDFC Bank, it closed more negative than Indian market. So overall, ADR indicating the mixed trend leaning towards the positive, and the same was in GIFT Nifty as well. I mean, on Saturday morning, it closed at 21,778. As usual, equating it over spot market, it also indicating Nifty to open flat to positive. So that's all about the global market. Now coming to Indian market. First, on Friday in the aftermarket hour, India's National Statistical Office released the FY 2024's first GDP advance estimation. Here, as per the report, Indian economy expect to grow 7.3%, which is way higher than RBI's prediction 6.5%. Generally, this is positive, but there are some controversies during the weekend that there is a discrepancy in the measurement kind of. So that data will have some focus today. Then second, Titan gave the business update that for December quarter, they expect their revenue to grow 22% and also they opened 90 new stores. Overall, it's good. The main jewelry business increased 21% and watch segment increased 23%. However, there is a 3% contraction in their eye care business and around 10% reduction in fragrance and fashion accessories side. I mean, simply their core business doing very good, whereas future potential expansion ones were not doing good. Third, Axis Capital, Motilal Oswal and CARE Rating, all three released their own report about Indian banks. Here, Axis Capital and Motilal Oswal released for the whole sector, whereas CARE Rating focused on ICICI Bank. Overall, all three of them gave a mild warning that they expect for the third quarter Indian banks to have a weaker net margin due to the increase in capital expenditure. They mainly highlighted that PSU banks to have more reduction in margin than the private banks. I mean, to some extent, everyone expect this margin reduction, but still we can expect some focus today for these reports, especially on ICICI Bank, since CARE Rating anticipates a decline of net interest margin from 4.48% in FY 2023 to 4.1% in FY 2025. But on the positive side, they still have the hold rating. Similarly, there was a report released for FMCG. I mean, the whole sector expect to have low to mid single digit volume growth. For insurance side, IRDAI released the report on Friday that they expect the dividend payout ratio reduction in Q3. So both FMCG and insurance sector from my perspective might be focused negative today. As a summary, US market closed positive, the global momentum also improved, Indian ADR and GIFT Nifty indicating the flat to positive opening, which is okay. But there are major sector-wise impacting news in the weekend. More often, global momentum is the one that plays the major role than the sector impacting one. However, recommend to be cautious. Moving on, as per stock open interest, Shree Cement, Kotak Mahindra Bank, Alchem Lab, Piramal Enterprise, Tata Steel, UPL and Tata Motors got an increased open interest along with a negative close indicates the short build-up. On the other hand, Oracle Financial, Biocon, Hero MotoCorp, Abbott India, Coforge, IRCTC and Indus Towers got an increased open interest with a positive price close indicating the long build-up. About the things to look out, in the aftermarket hours, immediately after 3:30 p.m., Europe's retail sales data and unemployment data are some of the items we need to keep an eye out today. Coming to technical, on last Friday, Nifty opened a gap up of 50 points and throughout the day it was volatile in the 80 points narrow band and managed to close 50 points positive and above 21,700. Hence, on the daily chart, it forms the doji candlestick pattern which shows the indecisiveness among buyers and sellers. I mean, on the upside, Nifty tried multiple attempts to cross above 21,750, but it can't. It was unable to sustain at higher levels, then witnessed the selling pushing it down. Then on the way down, it managed to hold 20 and 50 hours the key moving averages, then bounced back. So going ahead, we can expect Nifty to trade within the range 21,500 to 21,850 in the next few trading sessions. A decisive breakout from either side of this range will set the trend. As a overall, the structure is still in favor of the buyers. However, a consolidation is likely over the next few trading sessions. In case of Bank Nifty, it also opened 50 points gap up and also witnessed volatility but ended on a flat note. Thus, on the daily chart, it forms a hanging man candlestick pattern, which is a famous a bearish reversal pattern. However, mostly this candlestick is used only for the warning and the pattern requires confirmation for subsequent price fall. I mean, for confirmation, the subsequent few candles price should not close above the high price of the hanging man candle. Anyway, however, on the positive, Bank Nifty managed to recover more than 300 points from the intraday low to close. So, a closing above 48,200 is crucial as that could propel the index towards 48,500 and 48,800 levels. And the immediate support is at 47,800, which coincides with the 14-day moving average, indicating a key level to monitor in the current market scenario. Regarding weekly options data, the maximum call option open interest was at 22,500 strike, followed by 23,000 and 21,800, with meaningful new call option rating at 23,000 and followed by 21,800 strike. Thus, from the options, the near-term resistance is expected to be at 21,800 to 22,000. Whereas on the put front, the maximum open interest was at 21,000 strike, followed by 21,500 and 21,700, with new put option rating at 21,700 strike, then 21,000 and 21,500. Hence, the immediate support area is around 21,500 to 21,700. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.